Alright, so now that you know what a stock is, you may be wondering how you can actually get started trading stocks. To do that, you're going to need what is known as a broker or a brokerage account. A broker is simply a firm or a person who arranges transactions between a buyer and a seller for a commission when the deal is executed. Now, there are plenty of different brokers that you can sign up and get started with for completely free, and that's something that you're going to need to do to get started trading and to get started short selling and profiting from stocks that are going down. I put together some lists of a few popular brokers both in the United States and international brokers if you're somebody who doesn't live in the United States. But if you go into Google and you search brokerage account or trading account in whatever country you're based in, you'll probably find a more detailed, longer list of brokers that you can get started trading with. But anyway, a few popular brokers here in the United States are E-Trade, TD Ameritrade, Fidelity, Charles Schwab, and international brokers. A few pretty common and popular international brokers are SureTrader, Interactive Brokers, and TradeZero. Now, when you're opening a brokerage account, it's very important to look for a few main things. You're going to want to make sure that broker has, first, low commissions. Many brokerage accounts nowadays actually have completely free commissions, but realistically, as long as they're not more than maybe $4 or $5 per trade, then their commissions are probably pretty low and they may be a good candidate to open an account with. The second thing you want to look for is a low minimum account size. This is very important, especially if you're a new trader with a small amount of funds that you want to get started trading with. Some brokers require you to have 10,000, even 20,000 or even 50,000 or more dollars to actually open an account with them. However, there are others that have no minimum requirement at all, and some being as low as just a few $100s. So if you're opening a new account, it's very important that you make sure you have enough to fulfill the minimum account size, and ideally that's going to be a low minimum account of just a few $100s or less. Third, it's very important that your brokerage has good customer support. This can be something that is a little bit more difficult to find out, but if you search for your brokerage and look for reviews online, chances are somebody's going to mention something about customer support because it is such a big thing when looking for a brokerage. And I really recommend that you do look into whether or not the brokerage that you're planning on going with has good customer support reviews or not. Fourth, you want your trading broker to have reliable trading software. And that probably, of course, sounds like common sense, but unfortunately, a lot of brokers have very minimal trading software, especially if they're a brokerage that really relies on their mobile phone trading software. So, for example, I personally have never used the trading app Robinhood, but it's very common and very popular nowadays. And the only trading software that comes with your Robinhood account is what you get when you download the app on your mobile phone. So maybe some people can use their mobile phone to do all their trading, but it's really important for me at least, and for more advanced traders especially, to be able to do their trading on a desktop or even a laptop rather than just using their cell phone. So I recommend looking into what kind of trading software your brokerage offers, and most of them actually come with free demos so you can try out the software before even opening an account. And last but not least, what you want to look for in a broker is the ability to short sell. Some brokers actually don't allow short selling at all. So if you plan on utilizing what we're going to be discussing and learning here in this class and profiting from stocks going down, it's very important that you make sure that your brokerage allows you to short sell stocks. All right, so now that we have some of the very basics covered, let's talk about what we've all been waiting to discuss, which is what is short selling. So, short selling is essentially a trade type that allows you to profit from a stock's price going down. Short selling is often referred to as just shorting or even going short. Many people don't actually realize that you can profit from stocks going down, and when I first got started trading, I actually had no idea that you could either. I remember always buying stocks, and it seemed like every time I bought a stock, it pretty much would immediately go down after that. So when I found out that you can actually profit from stocks going down, it was really a game changer for me and is actually how I make a majority of my income now as a full-time day trader. Okay, so when you're buying a stock, we all know that you want to, of course, buy low and then sell high. When you're short selling, it's actually going to be the exact same concept. You still want to buy low and sell high. The only difference is the order that you buy and the order that you sell is going to be the opposite. So when you short sell, you want to sell high first, and then ideally later on, the price is going to go lower, and you're going to buy back those shares at a lower price. So I put together two diagrams here to show you how you would profit or lose in a short sale position. So if we look at the diagram here on the top, you can see that we short sell maybe just based on a basic trading strategy that we're going to be discussing later on in the course, and you're expecting the price to go down. In this case, the trade happens to move in our favor, meaning that the stock price does actually go down. Later on, we're going to buy to cover, which is the way that you would exit a position after short selling, and we then profit the difference between where we short sold and where we bought to cover. A losing short sell position is going to be when you short sell, again expecting the price to go lower, but in this case it doesn't move in your favor and the stock price actually goes higher, and then you have to buy to cover at a higher cost, losing the difference between where you short sold and where you bought to cover. In the next section, we're going to discuss how short selling actually works and how you can actually sell shares before even owning them, and talk more about how you can calculate the exact profit or loss that you would make or lose on each of your short sale positions before even getting into the trade.